Good morning, good afternoon, good day. Welcome to my weekly market recap, 7th August 2021. I am Sagar Nandi, retired IT professional swing trading stocks using Q systems and techniques. This is my email ID, my website, YouTube channel, and Twitter handle where I regularly share live market and stock analysis. You are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. I use the Q systems for my trading. They run on underlying TradeStation and Metastock platforms. That was the last slide. Let's continue with a look at the global markets, starting with Australian Index AORD, All Ordinaries. AORD made a new all-time high in the weekly chart. The backdrop color and shape both are bullish. In the last webinar, that was Thursday pre-market, price was here at the upper boundary and it has continued to be at the same place. It is clearly bullish but overbought, shown by the stretch band indicator. At the same time, Friday we have a bullish signal, that is a reversal candle. Bullish reversal at pendulum or price extreme high. Bearish reversals at pendulum high are useful to take low risk short trades, but in this case we have a bullish reversal that is making Australian index very bullish. If you look in the weekly chart, you find that the last reversal there also was a bullish reversal. It is looking very bullish but overbought. What about Japanese index? Last week we saw it was moving inside a range, unlike Australia. And it is continuing to move inside the range formed by resistance and support trend lines both in weekly and daily. China market, it had broken below the sideways range at this point, recovered, but still it is having a lower high and lower low. It's in a downtrend. The weekly backdrop color is magenta. Therefore, if price comes down next week, gives a bearish flow candle in the daily chart, that will signal the first go with flow trend following short setup after this prolonged sideways move. FTSE index, UK market. This is also moving sideways. There are two indecision signals, one after another on Thursday and Friday. Indecision at the top. Normally, we would look for a short setup when we see indecision at the top that is occurring at the upper end of the sideways range. But in this case, we will not look for short setup because there is a trend line support immediately below Friday's price. Lastly, India's Nifty 50 index. made a new all-time high this week. Backdrop color in weekly is bullish. The weekly tried to go below the trendline support 1 week ago. It was beautifully supported by the trendline support, and this week price went up from there. In the daily on Thursday, there is an indecision shape candle, doji candle with an indecision at the top signal. Friday price came down little bit. In this case, there is no trendline support nearby. There is an indecision at the top at price extreme high in both daily and weekly, overbought in the daily. In this case, we may look for low risk reversal setups in individual stocks. Even if price comes down all the way to the trendline support, it will still remain in an uptrend. And we may use this possible pull down to the support to take reversal trades in individual stocks. That was a look at the global markets. Some of the markets are moving sideways, that is Japanese market and UK market. Two of the global markets are in an uptrend, clear uptrend now. Both of them broke out of the sideways range. These are Australian market and India market. And the China market broke down and it is continuing to have lower high, lower low. For short-term trading, it is in a downtrend. Therefore, the global markets are painting a mixed picture. What about the USA market? For that, let's use Q Elite on TradeStation, starting with Dow Jones Industrial Average DIA. If you attended my Thursday pre-market webinar, we were at this point, and I mentioned that I booked my profit in the long put vertical in DIA that I took on this day. I entered the short trade when it made an intraday all-time high. I used the reversal from watermark resistance to initiate the short trade. After that, price moved up down up down. On this day, it was a down day. I had about 20% profit, and at that time price came close to the weekly trendline support. Looking at the flip-flop, not only on this DIA chart but also on Q Edge sector industry stock advanced decline breadth, I decided to book profit, and I mentioned that in the public live webinar. And now if you see, that decision was perfect decision. If I did not book the 20% or so profit, price went up on Thursday and Friday, I would have probably 20% or more loss in the put vertical trade. I could precisely enter the trade. I could accurately exit the trade because I looked at not only the DIA charts but also the holistic view of the market using all the different Q analysis. Perfectly timed entry, I may say, and perfectly timed exit, I may say. Now it has made a new all-time high. You can see that from the weekly chart. You can see that from the daily also. We are not able to take any short trade, of course, because it is very bullish. What about taking a long trade? On Friday, the candle has an upper tail and it is right at the watermark resistance. If we think about taking a long trade in DIA on Friday, the logical stop would be below the recent low, little bit far away, and that is why I don't like to take breakout trades all the time. I only take breakout trades when there is clear signal with a low risk entry opportunity, which is not true in this case. So I will avoid taking a long trade in DIA. and certainly there is no scope of taking a short trade. Over longer term, if you see the relative performance in both weekly and daily, it is continuing to hugely underperform the broad market. Dia made a new all-time high. What about S&P 500 ETF SPY? Also made a new all-time high on Friday. Also has a small upper tail. The body itself is also small body candle. Clearly bullish in weekly, daily both. Has a trend line support right below Friday's candle. We are not going to buy because the stop loss would be reasonable distance away, and we are certainly not going to short. Very bullish chart in weekly and daily has trend line support. If you look for the past couple of candles in daily, you see practically it is not moving, just up down move that is mirrored in the Q edge sector industry stock advanced decline. This up down move is making swing trading difficult unless you are able to enter the trade and exit the trade quickly, probably using intraday time frame. And I did that in a few trades. Dia was one of them. I took another trade in Tesla. I shared it also publicly. I'll explain the Tesla trade later. Both in the Dia trade and also the Tesla trade, I used the intraday time frame to enter. In case of Dia, I exited over daily time frame. In case of Tesla, I exited the same day using same intraday chart. SPY also made a new all-time high on Friday. QQQ made a new all-time high on Thursday. Friday price pulled back very little, closed with an indecisive shape doji candle. Interestingly, unlike SPY and Dia, QQQ changed to yellow color 2 weeks ago. The last two weekly candles backdrop color is already neutral, not cyan. It went to the level, the watermark level created by the bearish headwind and created a false upside breakout with a bear release signal in daily. If the trendline support was not there, we could look for shorting opportunities using a reversal at the top. It is similar to what I did in Dia. But in case of Dia, the trendline support was not so close at the time when I took the trade. In case of QQQ, the trendline support is too close to initiate a similar short trade. And I will not look to buy because Friday's candle is indecisive and backdrop color is neutral. Weekly shape is also indecisive. Lastly, Russell 2000 ETF IWM. Last couple of webinars I explained that IWM is continuing to be the weakest one. It is far from the previous all-time high, far being a relative term compared to how Dow, that is Dia, SPY, QQQ are acting. Compared to that, we may say IWM is far from all-time high. It had the trend line resistance in daily that is holding quite well. Friday price tried to go above the trend line resistance and reversed with a doji candle and with an indicator, this indecision at the top indicator. Normally we would like to take a short trade looking at the trend line resistance indecision at the top. However, in this case the weekly has a trend line support close by. Looking at that, we are not going to try any short trade. and indecision candles in daily, weekly both, we are not going to try any long trade either. What is the conclusion from these market ETF studies? The market is bullish, not for IWM but for SPY, QQQ, DIA. It is clearly bullish. This week, all three of them made new all-time highs. At the same time, the new all-time high was made with very feeble up move, and it is not giving a clear buy setup in any of the market ETFs. That is showing that it is not the time to take new long trades, not at least from the ETF perspective. And there is no short trade either. So the inference that I had in past 2-3 webinars is remaining valid, that it is not the best time to take swing trades. Let's look at some of the well-known ETFs. Let's look at ARK Fund, Cathie Wood's fund, one of the ETFs. It is inside a triangle pattern. ARKK, this represents growth stocks. It is when it is inside a triangle pattern in weekly, we know that the growth stock breakouts are not working. If growth stock breakouts overall were working, it would not be inside a triangle. Breakouts are supposed to be going up, but ARK is not going up. On Thursday, we had a range breakout in the daily, but on Friday, it gave back all of the Thursday's gains. And it precisely reversed from the weekly trendline resistance. So ARK is not going anywhere. Trading growth stock breakouts is remaining difficult. Will we reach the same conclusion from FFTY, IBD 50? Well, this had the trendline resistance in weekly, had watermark resistance in daily, price stopped near the trendline resistance, closed with indecision shape candle, and in daily it displayed a bearish headwind, bear release signal, reversed right from the watermark resistance, creating a triple top. This also shows that growth stock breakouts are not working. If growth stock breakouts were working, it would not have a trendline resistance still visible in the weekly, and this watermark resistance would be broken by now. I mentioned in one of the earlier webinars that in this kind of environment, you could buy FFTY or constituent growth stocks at the lower edge of the range, which would be somewhere here, probably using this bull release signal. At the close of this day, you could look at FFTY constituents and look for buy setup in them. As price recovered to the upper edge of the range, you would be able to book profit at a distance that was greater than the risk taken in the trades. But now I would not like to buy. It is in a range and it is at the upper edge of the range. That is a time to look for short setups, not to look for long setups. Let's have a look at the mega cap tech stocks, FANG stocks. Facebook broke out from the trend broke out from not trend line broke out from the watermark resistance, but then came down below that, creating a false upside breakout, went up again, so far having a lower high, but it has a trend line support. We are not able to short it, and I will not buy it now. There is no buy setup. The weekly backdrop color is yellow, that is not giving us any go with flow long entry opportunity. However, Facebook had been one of the strongest FANG stocks, and the other was and is Google, even stronger than Facebook in very sharp uptrend, unusually sharp uptrend for a huge stock like Google. The trend line support is holding very well. Multiple trend line supports in daily, perfectly catching the low of the candles in daily. Unlike Facebook, we don't have any false upside breakout here, steadily going up. Probably this is the strongest of the mega cap tech stocks now. Too close to upper boundary, I'm not going to buy now, and has excellent support in daily from memory trendline resistance. There is absolutely no question of trying to short Google. Microsoft also very strong, especially in the recent weeks. Earlier it was not as strong as Google, but in recent couple of weeks it has been super strong. Displayed a bearish headwind here, and since then price is moving sideways. Bullish, but I'll avoid buying now. The backdrop color is neutral and reasonably close to the upper boundary. Apple not so strong as Facebook, Google, Microsoft. Tried to go above the watermark resistance in weekly. Looks like it is creating a false upside breakout. The upside breakout, false breakout is not complete yet. If the closing price goes below the watermark, it will create a false upside breakout. At the same time, we see the weakness from daily, bearish headwind at the same level of the watermark that was created by the first bearish headwind. Using Q technique, when price came to the watermark resistance where bearish headwind appeared earlier, using intraday chart, you could initiate a short entry. That would be similar to what I did in case of Dia short trade, trying to catch the very top. Now it is moving sideways inside a triangle pattern. If the triangle is broken, it may give a shorting opportunity. Netflix, weaker than even Apple. Interestingly, I just sorted the FANG stocks by Friday's performance, and it seems by doing that, it selected the strongest ones at the top, weaker ones below it. So Facebook, Google very strong, Microsoft also strong, Apple less strong, Netflix less strong than Apple. Very sideways move, zigzag move in the weekly. When you see that, you can try to short the top end of the range around 580 price level, which would be here. You could try to short, and we had the bearish headwind at the very top, the local top here. You could short right at that time and book a profit when price moved down sharply. It came to the trend line support, and the trend line support held very well. Now it is not giving me any buy setup because trend line resistance is there in weekly, not giving any short opportunity because trend line support is there in daily. The last shorting opportunity was at the top when it was at the upper edge of the sideways range, and it displayed the bearish headwind reversal signal. Very sideways in the weekly. Next, Amazon. Not so strong. Moving very sideways in weekly, similar to Netflix. Here it tried to break out, and when it was reverting from the top, I mentioned that it looked like it was creating a false upside breakout. This also displayed the bearish headwind near the very top, came down, created a lower high, then fell down sharply. If you observed the chart day by day, you looked at all the Q signals, you could take a short trade right on this day as I did. Now it has a trend line support in weekly, also daily. So I'm not going to short it now. The backdrop color is bearish magenta in weekly. Traffic light color is also not green, it's yellow neutral. So I'm not going to buy it now. No trade in Amazon, moving very sideways in weekly, similar to Netflix. And Tesla, not bullish. If you look at weekly, having lower highs, it has an indecision at the top signal on the weekly candle. The weekly candle shape is very bearish. This is also looks like it is creating a false upside breakout. In fact, price closed below the watermark resistance, so the false breakout was confirmed by the close on Friday. I shared a post on Tesla during the day. I could see the bearish shape forming. I could see the indecision at the top in weekly. I could see the indecision at the top in daily, and then I was looking for a short setup. Using weekly daily, there was no short setup using the Q techniques, the typical Q trade setups. It was not there. So I switched to intraday time frame and I took a short trade. I shared the trade on my forum, sagarnandi.com. This is where I share my trade ideas, all open to the public, 360 degrees trading techniques and ideas. They are meant as a way of explaining how to use the Q systems. They are not stock trading tips. I always share the ideas before knowing the result. I shared this on Tesla first one day ago, Friday, 11 a.m. Reason to be cautious on this mega cap long positions. As I mentioned, there was no Q short setup. So I mentioned at least if one had a long position, one could be cautious. Why? Because the industry rotation was showing weakness in relative strength, and also it was showing deceleration. So the industry was telling us to be cautious. The stock was down as of that time by 2%. This overvalued stock has large earnings growth. However, if you look back compared to the previous quarter, the earnings growth came down. So decelerating earnings growth with overvalued stock, that allows us to short. And I pointed to the possibility of a false reversal in daily, pointed to the indecision at the top signals and the bear daily signal forming also indecision at the top in weekly. There was no short setup using weekly daily, so I used the intraday chart, and this is how I traded it. Switch to the fine-tune chart. In the morning session, I use 5-minute interval. This chart uses very fast indicators, mostly the pivot levels, and also it uses the trend lines. These are zero lag indicators. One technique as per Q guideline is to decide a trade direction. In this case, I decided that direction to be short only based on weekly daily analysis, based on industry analysis, based on fundamental analysis. Then the guideline, one of the techniques is to wait for the early range to be formed and see if price can break below early range low, which it did, and I entered a short trade somewhere in this area. The guideline is to put stop for the day just above the early range high. So I decided my stop to be here, but the stop was never approached even. Instead, price fell down, and at this point my risk distance was covered. One of my usual practice is to book at least partial profit if the risk distance is covered. In this case, I didn't book the profit yet, but I plotted the Q protection signal, which can be used as a trailing stop. And I was watching to see if the trailing stop continues to go down and down. So it went down in the beginning from here to here to here to here. And at this point, the trailing stop was hit. So it did go below the point where risk distance was covered, and then trailing stop stopped to go down. Instead, price went back up and hit the trailing stop exactly at the point where my risk distance was more than covered. So I booked profit in the trade. This was a perfect example of using weekly, daily, fundamental and industry rotation to decide trade direction, and then using intraday fine-tune chart, the early range breakout technique to take a short trade, and also a great example of not being greedy but booking profit once the risk distance was covered or when the trading stop was hit. Now market is at a very high level. So it is possible, but it is not happening yet, but it is possible market will drop. No sign yet, of course. I'll show the other Q analysis later. No sign yet that the market may drop sharply suddenly. Same view as I shared in past couple of webinars, but it may drop. So I used put options, but Tesla is an expensive stock, so I used put verticals. If price continued to go down, I would hold on to the put verticals, but it didn't, so I exited the trade. These are the options I used. Once again, I was able to cover the risk distance with very disciplined entry as well as exit. The entry was made similar to the dia trade, very precise entry. In case of dia trade, I held on to the trade for a couple of days and exited later. In case of Tesla, I exited the same day. What are the mega cap stocks telling us? They are telling us that they are pretty strong overall, but not all of them are equally strong. Facebook, Google, Microsoft are super strong. Apple less strong. Netflix, Amazon, Tesla not so strong. Some moving sideways, some are in a confirmed uptrend. What about the custom index mega cap top 20? That is part of Q Global Market Breadth. It displayed the bearish headwind reversal signal near the very top, then price came down, stopped right at the trendline support, and that trendline support is holding very well. If USA mega cap top 20 could be tradable, how could you trade it effectively, efficiently? that would be to use short put or short put vertical right on the day it dropped sharply and stopped right at the trend line support. When price drops sharply suddenly, the implied volatility of options is very high. The put options are especially expensive. And if you find the instrument to be at a support, and if the instrument is very strong, mega cap top 20 in general is quite strong, the efficient way is to exploit the high volatility of the put options. So you sell the put options. If it is too risky for your account, you may do put vertical selling. If you have confidence on the instrument and you are willing to hold on to the instrument if the price drops, then you could use naked short put, as I would have done in this case if mega cap top 20 was tradable, but it wasn't. If you could trade it using short put in a very large profit by now, and general guideline, my usual technique is to close the short put at 50% of max profit. Probably you would have hit the 50% of max profit by Friday if you could short the put on the day it dropped. It is continuing to be in an uptrend, very nicely supported by trendline support. If the support is broken, that is reason to be cautious. In the right edge, you can see it is underperforming the market, but over longer period, it is outperforming the market, shown by the relative performance copper colored dotted line. Let's look at some more market breadth studies. Have a look at the Nasdaq and NYSE market breadth, very broad market breadth. The yellow line is very useful to assess the strength of the broad markets, percentage of stocks above 50-day moving average. Moving sideways for last couple of days, for Nasdaq it is at a level of about 36. Recovered somewhat for NYSE, but still coming down. It's at the 50% level for NYSE. Therefore, NYSE is continuing to be stronger than Nasdaq, though the mega cap tech stocks are much stronger than both Nasdaq and NYSE as a whole. That is showing that the mega caps are outperforming over longer period. Though mega cap tech stocks are outperforming, Nasdaq as a whole is actually weaker than NYSE. And the yellow line for both of them are overall coming down and below the average line, or you may say below the 50% line also. Average line 50% line. So under the hood it is showing clear weakness. Same view, same analysis that I shared in several webinars in the recent past. Under the hood the weakness is very clear. And if we switch to the weekly interval, I showed it in last two webinars also, there is clear bearish divergence for advanced decline and up down volume for both Nasdaq and NYSE. This kind of bearish divergence shows the weakness, almost always shows the weakness before the market actually drops. So that's one reason to be cautious, not to take many long trades, especially not take long trades in stocks that are also at a very high level technically, that is technically overbought, and stocks that are also overvalued in terms of fundamentals. May not buy those stocks, at least I am not buying those stocks. The bearish divergence I showed in last few webinars and it is present this week as well. In spite of both QQQ, DIA, SPY making new all-time high this week. And if we look at the extremely useful single chart market breadth total view, this captures the insight from the two composites and four major indices in a single chart. The overall yellow line above 50-day MA, that percentage is slightly better than broad market NYSE Nasdaq. It is at 55% level, above the 50% level, and just went above the average line as well. That is showing that total FIB is stronger than NYSE Nasdaq. That is also implying that the mega caps are stronger or large caps are stronger. The yellow line is still coming down far below where it used to be, above 80% level here. The white direction line is also, not direction, the white line, that is the percentage of stocks above 200 MA, is also starting to roll over. So it is showing some improvement over last couple of days, but still weaker, much weaker than what SPY, DIA, QQQ would make us believe. When the market is at the very high point, I am looking for distribution count of 2 or more, looking for Hindenburg, looking for Phoenix, looking for Bingo if that comes. None of them are present. There was a distribution count of 1 on Wednesday. That was because of the weakness in Dow or Dow Jones Industrials. But as I mentioned, distribution count has to be 2 or more to be significant. We don't have any significant distribution count, don't have any Hindenburg, Phoenix, Bingo at the right edge. That is why I am continuing with the view that market may not drop sharply and suddenly, because that has never happened before. What kind of stock is in favor? Growth versus value line, magenta line. It was sharply going up, so growth was doing better than value. Now it is flattening out. So growth is equal performing value now. Small cap versus large cap, the cyan line, it was coming down, so small cap was doing worse. Large cap was doing better, that is also flattening out. Small cap, large cap are doing equally well or equally poorly now. It seems that the in favor stocks characteristics is changing, both in terms of growth versus value and in terms of small cap versus large cap. We'll see if this trend change, characteristics change continues in the coming weeks. The yellow line, white lines are showing weakness under the hood, but not enough signal to think that market may drop sharply suddenly, and there seems to be a continuing change in character of what stocks are in favor now. Let's look at Q age now. True to my earlier analysis that 1 day, 2 day periods are flip-flopping between red and green, that flip-flop is continuing. Remember, in the Thursday pre-market webinar, both of these were red, and I explained that looking at the 1 and 2 day both being red, I exited my short trade in DIA. Perfect timing. Why? Because not only the DIA chart had support, if the flip-flop continued, the red was to give way to green and DIA would have gone up, the profit would have eroded, and exactly that happened. Now 1 day period is green. Today is more green than it was in the last webinar. 5 day period more red than green. 10 day more green than red. 1 month more red than green. This is very indecisive move, up down move under the hood, that is also making swing trading using weekly daily time frame difficult. Is the market overbought in terms of bucket analysis? If we took all the S&P 1500 stocks, divided them into groups or buckets, depending on where they are in their Bollinger Band range, equidistant 10 bands, 1 meaning at the lower band, 10 at the upper band. Anywhere in between the upper and lower bands would put the stocks in 2 to 9 bands. All stocks above upper Bollinger Band would be put in band greater than 10. All stocks below lower Bollinger Band would be put in band less than 1. Then the percentage would be calculated for each band and plotted as histogram. What do we see? Overall, it is more green than red. We can see that from the pie chart also. 61% of S&P 1500 stocks are above the mid Bollinger Band. That is bullish. And the percentage was 47% on Thursday. So this was a significant up move in one day from 47 to 61. So 14% move in one day. Anything above 10% move in one day is significant. This was a bullish move. And in the last webinar, I showed that the bearish move was equally significant. Again, showing the flip-flop from one day to another day. Is it at an extreme high level? No. At an extreme high level, overbought condition, the percentage of stocks at the greater than 10 bucket would be at 30-40% or around that. But now it is only at 9%. So it still has a long way to go before it becomes overbought from bucket analysis perspective. Is that true from Finder technical breadth analysis? This technical breadth analysis shows the balance between bullish and bearish powers using technical signals and setups. The weekly Finder first. All signals little bit more bullish than bearish. Strength signal the same. Trend continuation, trend reversal. All the categories are more bullish than bearish. In last couple of webinars, even when price was coming down, I showed that the percentage of bearish headwinds in the weekly interval was not hitting the 2% threshold, around 2 to 3%. It was not hitting that level, and I mentioned that therefore there was no bearish alert from headwind signal. That was useful, isn't it? Because price didn't actually come down. Even though on day-to-day basis some weakness was there, the bearish headwinds on the weekly interval didn't flash any warning signal, and it is not flashing any warning signal now also. That was the weekly interval. If we see the daily interval, it is bullish with some bearishness in terms of reversal signals. Reversal signals more bearish than bullish, 60% bearish, whereas strength signal 76% bullish. And if strength is bullish, then reversal is bearish. Together, that becomes bearish. So Friday is showing some bearishness in terms of reversal. However, if we see the actual number of reversal signals, that is much smaller compared to the number of gap ups. So normally when we say that this is together bearish, when we combine strength and reversal, in this case we will not say that. We will not say it is bearish. Why? Because we see that the actual number of reversal signals is much more than the number of gap ups. So this is not bearish. Overall, the daily interval is also bullish. Is there any alert from the percentage of stocks from price extreme high giving bullish signals? No, it is far below 50% level. If the bullish signals, majority of them come from price extreme or pendulum high, that's also a technical overbought condition in aggregate, but that alert is also not there. The percentage is 39, far below 50%. So the market is at all-time high. There is some breadth weakness shown by Q edge, shown by percentage of stocks below 50-day MA, but not enough overbought signals, and clearly no bearish signals from Hindenburg or distribution count. In this situation, we may continue to take long trades. Shorting will not be effective unless it is intraday time frame. And I shared some long ideas, and intentionally I focused on stocks that were not only super strong in terms of Q fundamentals. What is super strong in terms of Q fundamentals? Those are crown jewels, undervalued stocks with great earnings growth as well as revenue growth, crown jewels. In addition to that, I focused on stocks that have fund accumulation. Fund accumulation is a new score added to Q systems recently. I am making good use of that. And one of the stocks I shared was X-Ray. And another one I shared Lazy Boy, LZB, and one is X-Ray. Both of them I was looking to buy, but they did not give buy setup using the daily weekly time frame, meaning they did not confirm the setup. I have 8 more minutes. Let me explain the posts from the beginning. First, X-ray. I shared it one day ago, August 6, 1 p.m. The Q signals would be confirmed at the close of the day if we are using daily weekly interval. This was on X-ray, and this is what I shared using real-time analysis. The industry, healthcare, supplies, that was weakening. So we wouldn't use industry strength as a reason. It was not only weakening relative to other industries, it was down on Friday, on the day I shared it. So industry would not be a reason to buy the stock. Fundamentals were super strong. Undervalued stock, very high earnings growth, very high revenue growth, and funds are accumulating the stock. You can see the high earnings growth and revenue growth year on year from these line plots as well. Very strong fundamentals, more than crown jewel, because it has fund accumulation as well. Industry would not be in favor, but stock, fundamental super strong funds buying, and see what happened. In this area, it steadily went down, steadily, without any break, steadily went down. That means, to me at least, that bigger players were steadily selling. Then it recovered somewhat, earnings came in, and price dropped back exactly to where it dropped earlier. Almost as if somebody knew the outcome of earnings, sold ahead of the earnings data, and after earnings it dropped again, but to the exact same level where it found support. And the support was beautifully provided by the Q memory trendline support in weekly. They work very well. In fact, if I found it or you found it on Thursday when it had the sharp drop, then using the methodology I described a while ago today, we could short the put on X-ray on Thursday, right when it hit the y direction line, and more than that when it hit the weekly trend line support. We would short the put right at that point. And if you did that by Friday, you would have, I think, at least 30-40% profit in the short put. But I did not locate the trade on Thursday. I located it on Friday, and I saw that it was starting to go up after sharp and sudden drop associated with very high, extreme high volume, found support at trendline support that made all the conditions of a bounce long trade setup as of that time. If the market, if the stock closed like this or better by the close, then the bounce long setup would have been confirmed. But it is closed like that. I followed up with a post today. It didn't confirm the trade because the candle, if you can see clearly on this chart, if not, you may open X-ray on your computer later. X-ray closed with an indecisive shaped candle. That's why it did not confirm the bounce long setup. If the candle shape in daily was bullish, that would confirm the bounce long setup. So we didn't have a bounce long on Friday. However, the trend line support is holding very well, and using the explanation that I gave just now, likely explanation, probably this exhaustion will lead to a up move. An up move just long enough to give us a low risk swing long trade. Daily interval did not allow us to take the long on Friday. If next week it continues to go up using fine-tuned chart intraday template, you may look for a buy setup. Very strong fundamental stock and has found beautiful support from weekly trend line. This is one stock I was tracking, but it didn't confirm. If you could take the trade using intraday chart on Friday, you may still be in the trade. At the end of the day, I wouldn't buy it because Q guideline wouldn't allow. The other stock that I shared, again, you see the pattern in these stocks. Firstly, they are not at very high price level, not technically overbought. Secondly, technically they are nowhere technically not overbought, and fundamentally they were nowhere near being overvalued. They are actually undervalued. So not overbought technically, undervalued fundamentally, and crown jewels as well. This is Lazy Boy, LZB, Z for zebra, home furnishing industry. When I shared it, that is 5th August, morning session, 10 a.m. Eastern Standard Time, I used the real-time analysis, all the Q systems including industry rotation, fundamental analysis, peer analysis, everything is performed in 100% real time. So I can decide trades during the day without having to wait for the market to close or anticipate a trade and see if the trade setup confirms. Home furnishing in real time was up. So that allowed me to buy up by a reasonable percentage, 1.3% for the industry. And pace column showed acceleration. There was some weakness in the middle. So the acceleration combined with the industry being up on 5th August in the morning session allowed me to consider buying a stock. And I found Lazy Boy, beautiful name by the way. Undervalued stock, great earnings growth all along, great revenue growth, funds are accumulating. As of the time I shared it, 100% of the 10 peer stocks of Lazy Boy were up. So industry in itself was very bullish. You can see the year on year quarterly earnings growth sharply going up in the last quarter. Very strong fundamental stock, and it had some selling in this area. Then it displayed a bull release signal. More importantly, probably it displayed a bullish headwind near the very bottom, and then it was starting to go up, but we wouldn't buy because there was a trendline resistance. I shared the post here, you can see in the magnified chart, mentioning that wait to see if the price can break above memory trendline resistance on this day. I was waiting for the breakout to take a long trade. However, it didn't give a breakout. Let's look at Lazy Boy using today's chart. This was the day when I shared the potential idea, but it closed with an upper tail, lower tail also in decisive shape. More importantly than that, it closed below the trendline resistance. So the breakout was not confirmed. Also, there was no bullish pressure. Volume was almost none. So the breakout setup did not confirm. Next day, price tried to go up but closed with a bearish shape candle. That was Friday. Now, Thursday, the breakout did not confirm. So Q Technique says look at the stock on Friday using fine-tune chart to see if it is giving an entry. And I did that. I was watching at it on Friday in the morning session using 5-minute interval using fine-tune chart, created the early range high, created the early range low. My preferred trading direction was bullish, so I was looking to see price could break out of the early range high. It did not. In fact, it went below early range low, but my trading direction was long, so I wouldn't take any short trade, and the long entry was not confirmed. Early range breakout is one technique to take long. Other technique is to use bull release signal at the bottom, but as you can see, there was no bull release at the bottom. So that also did not allow me to try an entry at the lower edge of the price. No bull release, and you can see not enough volume also. None of the requirements were met to allow me to apply the bull release kind of long entry, and there was no early range breakout, so I could not take a long trade in LCB. Fundamentals are still very strong. It is moving sideways. It has long upper tail in series of candles. If it can break out of all those candles with long upper tail, that may prove bullish, so I may keep an eye on this. It is inside a Q squeeze, and you can see sometimes it will show the Q squeeze, but the normal squeeze in the alternate signal is not there. So it's useful to look at both of them. The Q squeeze is a volatility squeeze that usually shows up before the alternate HSI, like the normal squeeze shows up. So the Q squeeze usually gives us a heads up. In this case, the Q squeeze is there. If it can break out of all the long upper tail candles, I think that will prove bullish enough to allow us to take a low risk long opportunity. I tried to enter long in both these stocks, super strong fundamental stocks at a low risk buy point, but the setups were not confirmed, and that is also showing probably that the market is flip-flopping. There may be some other buy setups, but it is not easy to find those setups, and neither is it easy to find low risk shorting opportunities using Q360 degrees approach. The same analysis, same conclusion that I reached in last couple of webinars, showing that it is not the right time to take swing trades yet. We may wait for it, and whenever it comes, using the Q comprehensive analysis like I explained today, you should be the first ones to know when the time is right. I will be probably one of the first ones to know, like you will be, to know when the time is right. Not yet, we wait for that. Thanks a lot for joining. I look forward to seeing you in our next session, which should be on Wednesday, 8 a.m. Eastern Standard Time. If you are subscribing to the Trading Profitably YouTube channel, you will get notification from that, and I usually share the exact date and time and link on Twitter page as well. Look forward to seeing you in the next session. Have a great weekend and trade profitably.